Who is the government protecting? Are they protecting us or the corporation?
So the whole notion that the Fed, or even in our case, the Reserve Bank, actually creates the money is a falsehood. It's actually the banks, the commercial banks that do it.
A so-called centralized body that can provide customer service who's operating in market failure and has been proven to launder money for terrorist organizations.
I believe true adoption for crypto happens when merchants start to transact in crypto. So it was actually TradFi that caused the dilemma in DeFi. So Adam, really nice to see you. Thanks for joining me today.
Great to be here. Good to see you too.
Be nice to have a chat about a range of things, but I did want to touch on what are your thoughts about Silicon Valley Bank and what's been going on in the US?
Where do we start, my friend? There's so much happening. Look, it was just a matter of time. It was not if, it was when, and one of the dominoes had to fall first. You can see that overseas we've got other dominoes falling, and we're talking about banks here metaphorically being dominoes. They're all falling, and it's now coming back into the West. That is, some of the big banks are going to go down, such as Silvergate and SVB. You're going to see, in my opinion, more banks. In fact, we've even seen another one fall recently. But the question is, when does it stop? And I just cannot see it stopping, CC. And it's because the core of it all, we can look at all this other noise about, well, it was the Russians, or it was the flu, or it was a supply chain. No, it's because the fundamentals of money is completely broken. And the real question, of course, is what is money? Now, in accounting terms, we talk about money being a unit of account, store of value, and a medium of exchange. But in reality, there is no money. The money is linked to nothing. They keep printing it. There are no rules around money. There are rules for commoners like you and myself, but there are no rules for the mega rich. They just keep printing this stuff. They get it for free. And when the interest rates go up so high, which we can see as a kind of false attempt to slow down inflation, it's a facade. The mega rich aren't experiencing that. It's those at the bottom and the middle class that are getting smashed by inflation. And they're getting smashed by the interest rates, and they're getting smashed by this fake thing that they're calling money. We need we need a real store of energy. You know, whether that energy is me sweeping a driveway or doing something on my computer or providing value to someone in some way, that is a form of energy that we need to store. We understand it when we store energy in a battery that we can use for later, but when we picture money as a store of energy and value and time, that we store in something that is a dollar or a Bitcoin or a hex or whatever crypto you like or something, we need to be sure that it will be there tomorrow. It's no good putting it in there today and saying, well, it should be all right tomorrow. But the truth is, CC, is that we can see that so many people, the majority, have just accepted that inflation is fine. Inflation is, we just naturally accept that there is going to be a decline in my money. You know, when it's 2%, you don't feel it so much. But when it goes to 6 and 7, and now I argue, and I've been arguing it for a long time, 20%, and I can substantiate this argument when it comes to inflation in Australia. A report lately came out with respect to how much food is in supermarkets, and that's got up 25%. Now, of course, that doesn't capture everything, but for many families, 25% is a massive hit on the budget when it comes to your food and shopping bill. So when people see 2%, it's like, yeah, I accept it. But when it's felt at 25%, people are starting to wake up.
How are the eggs?
I'm good for eggs. I've got lots of eggs. If anyone wants a chicken, I'm a chicken farmer by default.
I figured that.
Yeah, Ken's working hard.
And it's funny you say that because we've got chooks ourselves, and it's we've got an oversupply. So we've got an oversupply problem. We're thinking about setting up a stall out the front to sell.
Yeah, well, then you've got the supply chain issue. So we've got oversupply of the estate, but then if you want to get it out.
Yeah.
Like, you know what's funny with that as an example? I remember when I was at university, I worked at a convention center with lots of food. You know, we'd put on meals for up to 1,500 people, 3-course meals. And I can remember clearly at the end of the night getting trays of steak and pouring it into the bin, and because no one ate them. And so, well, hang on, why don't we give it to the homeless? You know, this is steak. You know, we've got trays of the stuff. And the response was, no, we want to, and we tried to, but in the past we did that. Someone got sick, and then we got sued for it. So it's cheaper and easier and faster to put it in the bin. And I don't know about you, CC, but for me, if I give away eggs and someone gets sick from it, which I can't see how it could happen, but if it did happen, is my kindness worth being sued?
That's right.
You know? But Dino loves them.
It's interesting you mentioned that whole connection to money, etc. And look, we're flippantly talking about inflation, but I think there's an English economist, name escapes me, it'll come to me at some point, but he speaks to the fallacy that's out there, the misunderstanding of what is money, who creates money. And, you know, for the large proportion of the community, I would argue that they would probably think that it's either the government that creates it or the Fed Reserve, or in our case, as you know, basically the RBA. And we've kind of both know that's not the case. That's not how money's created. Money's really, I would prefer to call it debt. Debt is what real money is, and it's created by the commercial banks, and they're the ones that actually create the money. And people don't understand that. They don't understand that when they hand over, because this is the other thing. People presume when they go to the bank to borrow money, the bank's only going to be providing you with anything on the basis that they feel that you're going to repay it. And effectively what you might do is if you're buying a property, for example, you're actually handing over the keys to the property, and effectively they won't say they transfer the money, but the money magically appears in your account to pay for that. But they've just automatically created money supply. It's single-sided entry. It's not double-sided entry. And all of a sudden, your account has an amount in it to enable you to transact to purchase the property you're purchasing. And then you're indebted to them. And the only reason that this works for the banks is if they feel that you're not going to be repaying the loan, you won't get the loan in the first place. So the only way that the system survives is on the basis that the community at large is actually going to pay their debts. Otherwise, the banking system would implode. And so the whole notion that the Fed, or even in our case, the Reserve Bank, actually creates the money is a falsehood. It's actually the banks, the commercial banks that do it. And I don't know if you're aware, but I think, you know, when you look at SVB, I think SVB was a significant bank. I mean, it wasn't in the top 10 in the US, but it wasn't a minnow. It was a significantly well-off bank, but they've made some really bad decisions. I mean, I heard, and I think this is true, but their risk officer had basically resigned 9 months ago, and they hadn't replaced their risk officer to sort of manage their risk. Too. Yeah. And fundamentally, my understanding is that, look, they didn't hedge a lot of their interest, and so they had long-term bonds that, you know, as we know, the Fed has created a situation where the return on those bonds were nowhere near as what they needed to be, in the sense that as interest rates go up, as we know, bond values, the underlying value, erodes. And when you have people coming to the front door saying, hey, where's my money? and then people hearing about them wanting to raise funds to cover some of those losses, it just created a run on the bank. And all of a sudden they realized, hey, we don't have enough in the back to pay the people coming in through the front. How on earth are we going to do with this? And I think in some ways, the government stepping in to sort of stymie that, to actually prevent a massive run on the bank, and then the potential contagion was a good thing. Having said that, though, there's an argument. Some people say it's a bailout. I don't agree it's a bailout. Technically, it's not a bailout because they're not using taxpayer funds to make good on the deposits. What they're basically saying is, hey, the deposits are fine. And there is an insurance that will cover to a certain degree, but we're going to make sure that the depositors are okay. And that's going to be at the expense of shareholders and bondholders in SVB. So I think on that basis, that's not a bad outcome. But there are some skeptics that say, look, just because it's not called technically a bailout, potentially it is. And I just think
that by default, CC, becomes a bail-in.
Yeah. Well,
that's true. It's one of two. Because the government doesn't produce any money. So this is the thing that is quite interesting. So how do governments raise revenue? And the answer is tax. But the other answer is actually through fines and through printing money. Yeah. But all of it comes at the cost of the population. Yeah. Now, this isn't an anti-government rant. I believe we need governments. We need structure. We need people to maintain order. We need safety systems. We need regulations. I'm all for that. But where the issue becomes, you know, who do we need protection from now? Do we actually need protection from ourselves, from the banks, or from the government? And this is where people are saying, oh, hang on a second, I thought governments, you were here to help us. And we want governments there to help us. But ultimately, when they print money out of thin air, and as you said, where does it come from? So let's say we do have a bailout, and the government say, right, here's money to save the mess that you made, banks. We allowed you, banks, to make the mess because we gave you the power to print money out of thin air through fractional reserve lending. Now you've made a mess of it, a business where you had free product, free supply, and you could charge interest on that free product. You still somehow managed to stuff it up. We're going to pay you for the mistakes you made to ensure that you remain solvent. They don't bail me out. They don't bail you out. They bail out financial systems that are at their core corrupt and broken, and yet we keep this ship asail. But the only way we do it is by diluting everyone's money. And if it's a bail-in by, as you said, we basically take the hit, or the shareholders take the hit, and those who held bonds or stocks in that company, they take the hit. Well, who agreed to that? If I buy a bond, or a stock, I should say, in Silvergate or SBV, or VB rather, why is it that a government gets to come in and say, hey, that contractual deal that you had with that entity over there, we're actually coming in over the top. We're liquidating your asset and we're taking it off you. It'd be the same as if, really, when it comes to money, people are like, oh, well, money's magical. No, money's just a product. Think of money like, if I bought a car, let's look at it this way. And I think this is an example that we could give to people who aren't really sure what's happening. Let's say I buy a car from Ford, and Ford starts to go bankrupt because they've done something wrong. Would it be right for the government to come in and say, hey, Adam, that Ford Ranger that you bought yesterday, well, we're going to take that off you and we're going to sell it at a third of the price to help out the company that you bought it from because they did something wrong? You'd be like, what? That's got nothing to do with me. I kept my part of the deal. I bought the car. I'm driving the car. That's fine. But yet we do that with a bail-in law. They force this down your throat. And when it comes down to, as you were saying before, most people don't understand where this money comes from. But they're starting to wake up, and they have to wake up. I had a conversation just recently with a very rich person. It was amazing. And I said to him, I said, what's gold? What's money linked to? And of course he goes, well, gold. And I said, no, it's linked to nothing. And this is an educated, rich, successful person, not in money. That is not a successful person in money, in the money of business. He was in the business, business of money. He was in the business of, I won't say because I don't want to give up their identity, but he was in business for something else, and money was a consequence of his very good business practices. But he didn't understand that money is just linked to nothing. So he worked hard. He produced value. He stored energy and some type of value in something that we call money. But he believed that money that he was creating, if you will, or earning, I should say, was linked to gold. It's linked to nothing. There is no money, CC. And as a result, we can see that inflation is out of control, and it doesn't matter what they do to the interest rates. Well, they could put them up to 50%, and all it would do would be collapse the economy.
I think that, and there lies some of the challenge, right? So most of the banks, it's very difficult, certainly in Australia, and I suspect it's the same in the US, it's very difficult to actually borrow for business purposes. It's much easier to borrow for assets like property, for example, or in some cases, speculation. And on the basis that really what the banks are saying is we're happy to do that because we trust the collateral that you're putting forward, and we'll be able to recruit. Thank you very much. And that's a less riskier proposition for us. But what that does, my understanding is that that potentially inflates the value of the assets that you're borrowing. So remembering that all we're doing is we're borrowing and we're making money. We're actually creating money in the process of borrowing the money to buy those assets. So that's why you end up with, balloons. So property markets ballooning out of control because people, free money, cheaper money, a lot of it being generated through debt, and then all of a sudden, holy cow, there's inflation. Well, surprise, surprise, that's what happens. This fellow that, again, and the name escapes me, but he speaks to what's really beneficial in terms of borrowing is if it can be directed to development of some sort. So if you're producing or if you're investing in a business, that's a much better proposition. It doesn't create inflation per se. It actually increases productivity. And the example he gave was something along the lines of, there used to be a significant number of regional banks in the US. Now that has been slowly but surely eroding by design, might I add. But then they compare that to Germany. And Germany, their financial system is healthy because they have a lot of regional banks, and a lot of smaller banks that actually lend for productive purposes rather than just lending to acquire homes. And unfortunately for us in Australia, I think we're more like the US than we are Germany. And it's the smaller player that really, they're being squeezed out. And I think you know that I used to work in the sector and I'm aware of some of the machinations there in Australia. And it was noticeable that a lot of the credit unions, building societies, they were being squeezed out. So the regulators were making it harder and harder for them to compete. Whereas in reality, the big boys were quite happy with that because it reduces the number of players in the market. But fundamentally, it's an ill to the economy, because if all the lending is being directed to a few, it doesn't create competition. And more importantly, if we're not lending for productive purposes, it actually doesn't help the economy at large. So I'm not here to bash the traditional finance sector. I think I'm not a fan, and I know you have strong opinions on this. But my sense of TradFi is, and here's the perverse situation that we find ourselves in. If you think about all the stable coins that are out there, there's such a hoo-ha about how well collateralized they are, right? So it's in many cases, if it's not 100% collateralized, there's massive doubts over the provider's ability to meet a potential bank run. But then you look at the traditional finance sector and think, well, all of these banks are, inverted commas, fractionally reserved, and which basically means they only have to hold 10%. It's like, why is it that traditional finance can do that, yet all of a sudden there's such an uproar if any of our stablecoin providers aren't fully reserved? It's just a nonsense.
Great point. And it's because ultimately because they're backed by the government.
Yeah.
And now we say, who is the government protecting? Are they protecting us or the corporation? And when you see this, you actually start to understand, well, hang on, maybe they're not protecting us, because if they were protecting us, I would say no matter what, a bank cannot bail in with your savings and your shares. No matter what, a bank must have 100%, 110% collateral for everything that they've lent out and what they owe, and apparently have on the books. They need 110% collateral. I mean, the CBA posted a half return or a quarterly profit of $5 billion. So within 3 to 6 months, $5 billion. Well, how can you not have reserves? So is it really a profit? Or is it just, skimming off the top of ripping off everyone else? And just to have a go at and I mentioned the Commonwealth Bank of Australia because they're the biggest, and they were originally a bank.
You're a fan, we know.
Yeah, by the government. So I remember years ago, I wanted to buy, years and years, I was still at university, I wanted to buy $50,000 worth of Commonwealth Bank shares. Yep. And they said, well, what's your collateral? And I said, well, I'll use the shares as a collateral. And they said, oh, no, we're not going to accept that. And I said, hang on a second, hang on. You're prepared to lend me money to buy a house and use that as collateral, but you're not prepared to lend me money to invest in you and use you as collateral. And I said, that's crazy. So even they admitted that they won't accept their own product, their own share as collateral, but they will accept a monetized market. So that showed me how much lack of confidence they had in themselves, or a double standard. Yeah. But when we talk about the closure of bank branches, so where I live, there's a major bank branch that's going to close. So first of all, we can see that they're removing ATMs, and a major bank branch in where I live is about to close. And you might say, well, it's because there's not much happening there. And it's like, no. This is like in a business hub. Whenever you go there are lines out the door, like queues and queues of people waiting to get in there. They shut the door at 4 o'clock and everyone stresses out if they're not there in time. So this is a bank that so many people need to do business. And what do? Well, we've just posted a half-yearly profit of $5 billion. Let's shut the door to one of our major branches in a major city in Canberra. It's like, well, hang on a second. Why do we need the banking sector? Now, if the banking sector is saying, well, because we give a good customer service, it's like, well, really? Because first of all, if you look at exchanges, they're only open during business hours. Second of all, you've got rid of all your ATMs. Third of all, cash is disintegrating anyway. Then we move on to the fact that you're shutting down your bank branches and your call centers are questionable anyway. Why do I need a so-called centralized body that can provide customer service who's operating in market failure and has been proven to launder money for terrorist organizations, and the fine when they do is much smaller than the profits that they make? So why do we need this? And by the way, with the development of AI, if you want to go to a call center, AI is going to be able to do what a call center can do 10,000 times faster, better, at a millionth of the cost. So really, where do these banks sit in? And where they sit in is because someone at the top is making huge amounts of money. Now, also, when you touched on when stimulus comes into the economy, where they print money and they put it into the economy, and you said, well, if that money is, and you gave the German example of where you prop up lots of bank branches where they give value to the economy, I would want to give an example of student debt as an example. So not in our country, but in the United States, and I'm sure we'll see this flow on to Australia because we often follow suit. When they forgave debt for student debt, all that did was put inflation up, because the money had to come from somewhere. And again, where do governments get the money from? They don't produce anything. So they either print it or tax it. And in any case, it hurts the economy. It hurts the battler out there. So what value did we get out of doing that? Now, if they're going to do it for that group of people, I would suggest that it would also have to be done for the blue-collar worker. The blue-collar worker who just took out a $50,000 loan to get a diesel truck so he could move goods and services from point A to point B to, like build the house that you live in, run the power plants that give you electricity in your home and your business. But no, there's no debt relief for them, but there's debt relief for those who are in the university, who are possibly sponsored by those who are at the top. What I'm trying to allude to here is that there's too many consistencies in these things breaking repeatedly to favor one very tight group at the top, a banking sector, a finance university sector, a narrative, perhaps a media that owns it all. I don't know who's in charge. But if we were really looking after the people, again, the question is, who are the governments there to protect? Those at the very top who sponsor the most, or the population? Because if it were the latter, I don't think we would be taking steps to smash the battler with high inflation, high interest rates, and choosing bailouts for that group, but not the other group.
Look, it's interesting because it kind of leads into the whole notion of CBDCs, right? And a bit of the skeptic in me feels that, I don't know if you know, but that today, I think it was today, there was the announcement of FedNow, which is, I think they're piloting FedNow in July, or it might have been June, but they've made an announcement today about FedNow. And this comes off the back of, obviously, Silicon Valley Bank, the closures there. And you probably would have, of course you would have noticed the de-pegging of USDC and DAI and understanding of that. And I must admit, it's funny how these things always tend to happen over a weekend. And there would have been a mad flurry of people sort of concerned about the stability of USDC, not realizing that, hey, this wasn't a de-pegging because of under-collateralization. It was a de-pegging because, and here's the point of difference, we're using a counterparty to provide a stable coin. And Circle really had done nothing wrong other than they'd parked money or their reserves with the bank that actually imploded. So it was actually TradFi that caused the dilemma in DeFi. It's kind of like, okay, now you'd argue that Circle is a centralized body. Obviously, it represents a counterparty risk, but there's flow-on effects, right? So people don't always realize that, hey, just because you understand the nature of that risk, here we have a bank that you may or may not have heard of, a CEO and a CFO that you definitely wouldn't have heard of, and their misbehavior is what caused the de-pegging for USDC. Now, thankfully, that's come back okay, and I think even DAI was affected because of its connection with USDC. But here we have classic examples of, it wasn't even crypto that was breaking here. It was actually traditional finance that was causing the issue. But you can almost bet your bottom dollar that, the regulators and potentially some of the politicians in the US will jump on the bandwagon to try and bash up stable coins again, even though the reality is that there is an expectation that they are collateralized, yet 99% of all the banks in existence work on a fraction of that. They have 10% in reserve.
And they've already started with Silvergate. So I regularly attend, mainstream interviews with Ausbiz, and I'm like the crypto guy that goes on to this financial channel. And what was interesting is that, they're very good. I've got no affiliation other than I'm a guest on their channel, but they're very much in the TradFi space. And I'm like the token crypto guy that comes in. And so when we were talking about what's happening with Silvergate, I've got to be careful what I say here, but they were alluding to the fact that, or to the perception that the reason why Silvergate went down was because it was heavily invested in crypto. And it's like, I had to sort of stand up for this bank that was collapsing, not because I was standing up for the bank, but I was standing up to the allegation of, oh no, they could have all had their money in crypto, and because crypto is bad and crypto went down, this bank collapsed. Now, what was interesting at CC is that whilst we were, it was live on TV, and I had a chart up next to me, and I said, no, the whole markets are green. Bitcoin's up 10%, Ethereum's up 9%, everything's up. And the presenter was a bit taken back, and he's like, huh? And I said, no, look, yes, they were a venture capitalist bank. Yes, they were invested in a lot of tech stocks, including crypto projects. But the truth is, when you look at, I think they had $1.8 billion in treasury bonds, and they got those bonds at 1%. That is 1% yield. It's like, why did you get 1% yields? Because that's all they were giving at the time. But then when the deal changed and the government started selling 5% yielding bonds, well, they're left holding the bag of something that's got 1%. How do you make profit on that when there's now a new product that's at 5%? How do you sell these treasury bonds of 1% versus 5%? Now, concurrently, one of my subs even said, hey, Adam, just to be clear, if I've got money in the bank and they're giving me 5% interest, does that mean I'm making a profit or not? And the question was so simple but so profound. Because so many people believe that if they're earning 5% interest at the moment, it's like, yeah, this is really good. High interest rates. It's like when you're losing 20% purchasing power, or going back to the food example, when you're losing 25% purchasing power to buy, the stuff you need to live and feed your family, and you say, well, I'm making 5% in the bank. No, you're still losing 20%. Right. So you're absolutely right. When it comes to crypto, it's been, the word I use is kind of hijacked by the TradFis. Yep. The traditional traders, they've come in and they've put their old spin on this new technology. But it mark my words, CC, it will separate, it will break away. And the best example I can give is one I just did, was that when a bank was collapsing and the world was ending, the entire markets, they had 2 consecutive days of 10% and then 10%. And the normies were like, how is that possible? And it's like, because people are now waking up and it's like, well, where do you put your money? Now, we've gone a little bit red today. I think it's less than 1%, which is great. You want those natural pullbacks. But the real question, my friend, is where do you put your money? And if it goes back right to the beginning of what we were talking about, it's like, what is money?
Yeah, that's right. And I think when it comes to crypto, I think that connection back to USDC, the perception that something had broken its circle, obviously that wasn't the case, but they had put their faith in another counterparty that we weren't aware of at the time. Certainly I wasn't. And that was traditional finance failing, causing a ripple effect. And here's the thing for me, I'm not a big believer in the centralized stable coins for that reason, that it's some of them, and we know, for example, the likes of USDT, that has always had speculation around whether or not it had full reserves or not. I actually think here's an example where Circle, as I understand it, were very transparent about where their reserves were held, what reserves, what the amounts were, and what they were held in. Whereas USDT is a little bit guarded about that. And I actually feel that in a perverse way, that's not a bad thing. Because sometimes full transparency, if you have nefarious actors, and, if you put the tinfoil hat on, you'd say, you know what, if you're a big player here and you want to squeeze the market a little bit, this is not a bad way to do it, and you can manipulate things. And there is a potential they'll jump on something on that basis. And so there would be an argument that would say, hey, you know what, maybe sometimes being a little bit less transparent is not a bad thing. Now, I'm not advocating for centralized stable coins. As you know, I believe in a decentralized version, and it was interesting, but I think there was a significant premium being paid on the liquidity version, the LUSD stable coin, for the fact that, hey, there is no counterparty risk. Effectively, it is, the more I think about this, the more I think that, Liquidity, and obviously my project, Liquid Loans, we're a community bank, right? And if you take the German model and say, look, there's a hell of a lot of smaller banks that are really aimed at supporting the community. Well, we've got the crypto version of that where there's no counterparty risk. And I kind of feel like there's potentially a divide even within TradFi where the big players are trying to effectively squash the little guys out. But it's the little guys that actually do more benefit for the economy than the bigger guys. So I think there's some alignment in principle around what they're trying to do and what we're trying to do from a let's fund the community. This is a community bank serving the community rather than a centralized body effectively raiding everyone's till and it taking us all for a ride for the benefit of a few. So longer term, I really hope that we move to more use of stable coins. And let me just expand on this. I wouldn't mind your point of view on this. I believe true adoption for crypto happens when merchants start to transact in crypto. And the only way they'll start to transact in crypto is if they have a stable coin that they trust. And I think something like LUSD, and obviously when we launch USDL, because there's no counterparty risk, that represents a really good stable asset that they can use. And more importantly, if they're transacting within the ecosystem, they never have to exit to fiat, right? We don't need off-ramps, but effectively we need people to do that. And there's another argument for merchants to do it. And I'm sure you've experienced this. Merchants pay a fee for all of their transactions, right? So that varies depending on the facility that you're using, but that's just by and large, it's anywhere from 1% to say 2.5%. But then you have the facility fee, and then you might have a card reader fee, and there's all these fees that ramp up, and all of a sudden you're looking at 3.5%, maybe up to 5% on the value of things that you're transacting. And more importantly, sometimes you can be waiting up to 3 days for payment. Whereas imagine a day where you can go in and you can use USDL or LUSD, for example, and pay directly, and the merchant gets paid then and there. And the better thing is, if they can then purchase all their items within the ecosystem, they never have to leave crypto. I would like to think that's our future, but gee, it also feels, the realist in me feels like we're so far away from that, but I'm really hopeful that that's the direction that we can take. What's your view on that? How do we evolve? How do we really gain the adoption that we need?
There are two parts to this really good question. So the first part is actually the medium of exchange. So I want you to think about this. When I used to travel when I was a lot younger, my dad would say, "Hey, Adam, have you got traveler checks?" And I'd be like, "Traveler checks? What the hell do I need them for?" And he goes, "Well, have you got the local currency?"
What are they, mate?
Yeah. And I'm like, I saw one in a museum once. So what he was really saying is that, "Hey, Adam, do you have a medium of exchange? I know you've got a store of value, but do you have the medium of exchange?" But what I said to him was, I said, "Dad, I don't need that anymore. I've got a credit card." And he said, "Yeah, but that's your Australian credit card." And I said, "It doesn't matter. I can use my credit card pretty much anywhere in the world where there's a point of sale terminal. And even if I want the local currency, I can walk up to an ATM, put it in there, and I can put in some numbers and money comes out the end." So that is a medium of exchange. Unit of account, don't worry about for now. The store of value is what's behind that card. So I actually say we already have a global currency, and it's not the US dollar. And again, we're talking about the medium of exchange. The global currency as a medium of exchange at the moment is a credit card. I can take my Australian credit card and use it anywhere in the world where there's a point of sale terminal. Now we go on to the second part. What's backing that credit card? Well, the Australian dollar, because I'm from Australia. But when I go to America and I tap and pay at Ralph's, at a supermarket to get some bread or milk, the Ralph's checkout chick doesn't care. The manager of Ralph's doesn't care. What actually is happening in the financial systems in the background is that they're saying, right, Adam spent this much money at this time, and we're going to convert it from the Australian dollar to the US dollar. Okay, now we extrapolate this a bit quicker, and AI will come into this. The speed of which we can operate now on the global stage with decentralized models, with the internet, with AI, a discussion I had recently with Michael Cotton, check it out if you haven't seen it, really fascinating stuff, because we went down this rabbit hole. And we actually discovered together, well, he led me down, he's much smarter than me, but what we found is that you actually don't need a currency. So, for example, let's say you come and shop with me and I say, I want Bitcoin. And you say, well, I've only got liquid loans. I don't care, mate. When you tap on my terminal or you scan your QR code or you do whatever you want, I don't care if it's 3 o'clock in the morning on a Sunday in Brazil. It doesn't matter. Because we are a global network and there are dexes, and even if it's not a dex, it could just be some exchange somewhere that says, Adam said that he wanted Bitcoin. CC's paying with liquid loans, a stablecoin, or the token itself, doesn't matter. The second that transaction happens, it automatically converts and goes into my account. Now, whether I choose Bitcoin or liquid loans or the US dollar or a stablecoin, it doesn't matter. The real question is, how do we ensure that you accept what I accept or what I've got? It doesn't matter. Hang on, let me rephrase that. How do we ensure that I'm happy to accept what you've got? And the answer is an exchange. Mm-hmm. So this is where you have dynamic pricing. You might say, if you pay in Bitcoin, I'll give you a 10% discount. If you're paying this, you get a 5% discount. If you're paying that, there's an 8% premium. Or it gets to the point, it's like, I don't care, just tap, do the conversion and make it happen immediately. So there is value everywhere.
Yeah. If you were to, just to interrupt you, Jeff,
yep.
If I'm the merchant,
yep.
You turned up with a card, let's just call it the liquid loans debit card.
Yep.
It wouldn't matter if you had USDL on there or any other token on there. Fundamentally, as the merchant, I want stability, Adam. I don't want Bitcoin. I don't want Hex. I don't want...
I got it. Choose your currency.
Yeah. So for me, it would be, give me that stable coin, give me that USDL, because I know that...
But I'm not that guy. So I understand what you're saying. But I'm saying I don't want because a stable coin is not stable. Yep. A stable coin is a depreciating asset because most stable coins are pegged to the US dollar. Now, when stable coins are pegged to bottles of water or ounces of gold or cans of Coke or walks with Dino Dog, that's what I choose. I say, I want that money. And you say, I've only got this money. It's like, whatever, man. When you do the exchange. Now, the real thing that's going to happen, the real evolution, was who actually owns all the point of sale terminals at the moment? The banks.
The banks do.
The banks do, that's right. So the last piece of the puzzle is actually the POSs, the point of service terminals, the point of sale terminals. If you, especially in Australia, I don't know if you've noticed, there's one bank, it's not a bank that I'll be talking about tonight. You go to almost any outlet anywhere, it can be a servo, a supermarket or anything, all of them are owned by the CBA. And so every single transaction that goes through, the CBA is getting bang, 1%, bang, 1%, bang. Why do I need that? Why can't I just use a QR code? And it will be. We already have the technology. Yes. So the two things that we have to separate are this. One, the fake money that is fiat. And two, the banks. And then you and I can agree, you can have any currency in the world you want. If you want Dogecoin, Shiba Inu, liquid loans, Hex, Bitcoin, I don't care. Just the same as when I go overseas and I'm transiting through countries. For example, I did a Kentucky tour. I went through like 13 countries. I don't even know where I am. I'm like, here you go, tap.
Were you one of those young kids out the back, the hooligan up the back of the bus?
I actually sat, the funny thing is I sat at the front of the bus because you can actually see everything as you're going through Europe. It was fantastic.
Yeah.
But when I was younger, I would have been that guy. So yeah, once we can... You asked the right question right at the beginning. What is money? Yeah. And it's what I accept as value. If you want that token, I don't care. I don't even need to know what you want. If I want this token, you don't even need to know. All that we need to know is that when we tap...
Are you going to pay with Bitcoin for that pizza? Are you really going to pay with Bitcoin?
Maybe or maybe not. But I don't have one money. I have multiple monies.
Yeah.
And that's another paradigm that we have to break down. We already have multiple monies, and when it comes to sovereignty, they say we can only have this one money because we're in this country. But I can already debunk that. If I go to a government shop front with $100 note Australian, it says on it, legal tender, the merchant in Australia must accept this. Yeah. So I'm an Australian using Australian money at an Australian government shop front. And I say, hey, I've got my registration I want to pay. Here's the money. And they say, sorry, we don't accept that. And I'm like, what do you mean you don't accept that? I'm an Australian in an Australian government shopfront with Australian money, and it says on here by law, you have to accept this money. We don't accept it. And what do they say? They say you have to use a credit card. And who owns the credit cards? A centralized body. So that's that link I'm talking about. We need to remove that government mandated rule that says you have to use that centralized body. Now, this is where it gets really fascinating. Imagine you were that body. Imagine you had the government backing you up. I'll make a simple example. Let's say there's coffee all over Australia. We love our coffee in Australia.
Yeah, of course we do.
And the government deemed that, hey, you can have all of these coffee cups and all of these coffee outlets. But we as the government, we say, by law, you must only buy CC beans from CC Proprietary Limited. Well, that's actually called communism. And that goes against what we do. Yeah, but yeah, we do it with money. We do it with money. Now, the counter is they say, well, hang on, Adam, tax and terrorism. I say, I'll pay my tax.
Yeah.
And I'm not a terrorist. Yeah. You use my taxes to make good militaries, good police forces, which I endorse and support. Don't treat me as a terrorist by you acting as a terrorist, by suppressing my freedoms and telling me what I can and can't do within the parameters of, what is legally right. But when it comes down to, no, you can't use the money that we issue. You have to use these point of sale terminals, and that entity over there called a bank, they can print money that doesn't exist. That's the law. Well, who's really the terrorist then?
Yeah, that's right. It's all that control. I have to ask you, Adam, just if we can pivot a little bit, because Richard's pivoted lately. You would have noticed he's no longer flashing the Gucci bags or the Rolex watches.
Okay, so we're talking about Richard Hart from Hex for the viewers out there.
Exactly.
Yeah.
So Richard Hart, he's definitely pivoted away from, I used to call it ambush marketing, but it's not that. It's the old outrage marketing. So I think he gave that a good run. He gave it a really good run. But I think now he's sort of pivoting back to what I can remember him to be. And that's someone that's sharing his knowledge. And, I'm noticing he's tweeting a fair bit. And there is a fair bit of discussion around Pulse at the moment. I think they're working through basically it's the consensus and the layers that exist in the new version of Pulse. And it's a really good sign. And I kind of feel like, it poses a question to me, because we know that Richard initially created Pulse to help support the Hex community, right? Because we know that Ethereum was, and it still is, quite an expensive chain to transact on. Mm. So Pulse was really the intent at the time was, look, here's an opportunity for us to create a blockchain to facilitate the transactions for Hex. And it leads me to my next question, which is you and I have had a lot of discussions around, is Bitcoin versus Hex. Now, tell me why it is that you love Bitcoin as opposed to me telling you why I love Hex.
Okay. How much time have we got? Okay. So, once again, let me start with this. We don't need just one money. We can have multiple monies. And once you accept that, as a crypto goer, broadly, because we're so tribal, all of us, it's like you've got the Bitcoin maxis, you've got the hexicans, and I kind of try and say, hey, I'm Switzerland. I invest in lots of coins, and I was researching Hex when it was Hex Bitcoin. It used to be called Hex Bitcoin. So we can all pivot on our positions, and just on Richard pivoting on his Louis Vuitton marketing thing, I think he would say, we have no right to have an opinion because he built a multi-billion-dollar company and he's much better at it. Cool. But what I would say is that when he was doing the Louis Vuitton man bag landfill crap, that he was perhaps attracting the wrong audience. Yeah. Like, some people enjoyed it, that's great. But when you're a big player, when you're a multi-billion-dollar big player, you think man bags impress those people? They don't get that. They can buy Louis Vuitton, and that's the money that we're after in Hex. That's the investment we want in Hex. Yep. We want the big players. We've already established a really sound community in Hex. So let's drop the tacky marketing and let's get into the real stuff, which he's doing now, which is fantastic. So that part aside. And we're a big fan of Richard, so it's no hard feelings if he's watching. I'm glad you've pivoted on that position.
So am I.
Yeah, it was just so cringy. But anyway, I do things that are cringy. We all do. And I say give everyone 20% forgiveness. And I still endorse what he does a lot. Okay, now Bitcoin versus Hex. I'm huge on freedom and democracy. I'm huge on decentralization, borderless, open source, immutable, transparent money that everyone can have access to. The world needs a global reserve currency. The reason why I'm so big on Bitcoin, at no detriment to any other coin that I like out there, including Hex, is because ultimately when it comes to a global reserve currency, because everyone's saying, well, what is the anchor point? Now, it could be gold, but we can see the limitations with gold. It could be bottles of water. It could be barrels of oil, or it could just be digits on a screen. As long as we all agree that those digits are finite, we can all see it. It's borderless, censorship resistant. Everyone has access to it. And the best thing that we've got at the moment is Bitcoin, because as a global reserve currency, fiat is dead. And everyone kind of agrees to that. Even Peter Schiff, who hates crypto, like at large, it doesn't matter which coin, he agrees that fiat is dead.
Yeah.
In different crypto camps, where we all come together, is pretty much all of us agree that fiat is dead. Now, what I see in my future, or our future, is that there will be one Mac Daddy. And that's not to say there will only be one. I'm just saying that in nature, something rises to the top. It might be the king of the jungle. It might be the tallest tree. It might be the biggest kid at school. It might be the biggest business. Some will say that's evil and wrong. I say, well, no, that's nature. That's how it works. So I see Bitcoin as being the global reserve currency. The reason why I don't see any other coin being the global reserve currency is because as soon as a human, well, obviously Satoshi was a human, we think, but as soon as someone that we know that we can sue, that we can cut the head off the dragon, the banks are going to come after them. The governments are going to come after them. No one can come after Bitcoin because it is a global secure network that no one can kind of attack, but everyone is equally able to get into. Now, let's say Hex is the greatest thing in the world. I say then, it's a computer program. Why would a government, or more importantly, why would series of governments say, look, we've looked at gold, we've looked at the US dollar, we've looked at Bitcoin, and we've looked at XRP, and we've looked at what we could make ourselves, CBDCs, and we choose Hex. You're going to be the global reserve currency. And I'm like, that's never going to happen. You're kidding me. That's not going to happen. Again, that doesn't mean I don't like Hex, and I don't think it's got a use case, and it doesn't say that there's only going to be one money. It's just that my main push for Bitcoin is it's a decentralized, immutable, open, borderless, censorship, global reserve currency that everyone can be part of, and there is no other crypto on earth that can do that.
Look, I think, because you and I have had this conversation, and I know we could spend another hour talking about this, but my point of view on that would be, I think Bitcoin certainly has significantly more adoption than Hex has at this point, but that's also the beauty of Hex, right? So, and you know that my expectation, and I wonder what your views are on this, is that Bitcoin, and I think we had this conversation, to you, that's a risk. It's a less risky proposition.
Yes.
Because of the adoption.
Lower risk, lower return.
Because of proof of work, because of, just effectively, it is so much better known than Hex, for example. And I can understand from a risk point of view that that's a better proposition. But my argument against Bitcoin is more to do with its likely diminishing return, because as people become more aware of Bitcoin and there's increased adoption and people start to acquire Bitcoin, my expectation is that it will follow the path that it has, and that's continuing diminishing returns, which I actually think supports the notion that it will end up potentially being a world reserve currency because it won't be as volatile as it has been. And so the challenge there is that's a good thing, but it also doesn't provide, if people come into crypto with the expectation of significant gains, I don't believe those gains are going to come from Bitcoin, but it is definitely a store of value. And my expectation is the volatility will decrease. And you and I are the same in many ways, in that we want to, we do want to effectively hedge against one particular token outperforming another. But for me to have a mixed bag that says, hey, you know what? Bitcoin's not too bad as a percentage of my portfolio, but I'm a big believer in Hex because I know that it doesn't have the adoption that it's likely to see. And everything that's happened so far is kind of reinforcing the notion that despite what you might think of Richard, he's right. So a lot of what he says is absolutely on point. And as a consequence of that, more and more people that you would have noticed, there's a lot of influencers that have all of a sudden started to come around. I think Ivan on Tech's the most recent one that comes to mind, where he's now a big advocate of HEX, because people have looked past that whole, it's a scam and blah, 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 and the OA address and all that sort of nonsense. And so I'm very hopeful that HEX will start to see significant appreciation as this market starts to turn. And I think it would be, and you and I are the same, we're invested in HEX, and a little secret, I have a little bit of Bitcoin, probably not as much as you.
Finally.
Probably not as much as you, but I'm a big advocate of HEX. But I really sincerely hope that we end up in a position where we come together as a community rather than we're effectively always fighting against each other. And that doesn't help us. It just divides the community. And when I say community, I mean crypto at large. And we should be trying to work together to overcome the real issue, and that is, centralized finance and traditional finance that have caused a lot of the pain that we're suffering at the moment. One thing that I may not have shared with you so far is that, with liquid loans, we rely on an oracle, right? We need an oracle to provide a price feed for Pulse so that we can actually work effectively with liquid loans. Now on Liquidity, on the Ethereum chain, that they use a combination of Chainlink and Tellor. Now, Chainlink, we had conversations with them. They're not really interested in coming over until Pulse is launched, and on some level we can understand that, but that didn't help us. Nick Fett, the CTO for Tellor, he's been working with our team closely to work through what we need. There will be a new offering. It is powered by Tellor, so effectively it is the Tellor system, and we'll be launching that as a native token on Pulse chain. And, we're probably a couple of weeks from announcing that. So when I'm ready to announce it, we'll announce it. I'd love to tell you what it is now, but I think the team would probably kill me for doing so. But it is something that's going to come about. You can imagine when that does happen, there will be a significant benefit, not just for the liquid loans team, but for the Pulse chain at large, because we know that there's a whole bunch of other DeFi projects that may be interested in participating in that. So really happy with progression there. I think today's been a really, I love talking with you, Adam. I think I should say that, I consider you to be one of the best crypto commentators out there. And I think you're very impartial. And I think one of the things that I really like about you, Adam, is that you don't play favorites. You tell it as it is. And whilst, you have a lot of rants at times, I personally really enjoy some of your rants. And I've really appreciated your support and your candor, during the time that we've known each other. And again, thank you very much for coming onto the channel and allowing me to have an open conversation with you on all those topics we discussed today.
It's a great pleasure. Thank you so much, CC.
Thanks, mate. Thanks very much.